two more rate cuts in July and August. That's a relatively shallow interest rate cutting cycle, and we think the Reserve Bank will then, having got back to a more neutral rate of interest, will want to see how the economy plays out over the next 6 to 12 months before making a firmer step in one direction or the other.
When we last spoke to you a few weeks ago, Commonwealth Bank was tipping a rate cut in August, now is forecasting one for tomorrow. What changed?
I think the case has built slowly over time for a rate cut in July. We were fairly confident when we made that call previously for an August rate cut that the Reserve Bank would move quite quickly to bring rates back towards more neutral levels. What we wanted to see was what the flow of data, the labour force in particular, and the monthly CPI that we received a few weeks ago, what it would tell us about the pace of inflation and the broader economy. And if anything, those have shown that the growth momentum in the economy is still relatively soft and that inflation pressures continue to come down. And when we look across the range of other inflation indicators that we monitor, we think there's a strong case to say that inflation has continued to come down. And if the Reserve Bank waits too long and moves too late, there is actually a risk that inflation could undershoot the midpoint of its inflation target. So we think the case has built. We were always saying that the July meeting was live, and we think now the case has built to the point where they will move.
The latest household spending indicator came in above expectations. Can you paint us a picture, if you like, of Australian consumers right now and their willingness to spend, and whether they believe the cost of living crisis is behind them?
Yeah, it's a really interesting question, and it's quite a mixed picture when you look at the consumer across the different data that we follow. I think we are still expecting that as interest rates come down, as inflation starts to ease, that consumers will feel more confident, they'll start to spend more, and that will support a pickup in growth over the next 12 months in Australia. But so far, the consumer has proven quite cautious, and we're not yet seeing a real pickup. We saw a bit of a burst late last year as people took advantage of end-of-year sales, but so far this year the momentum's been quite soft. That data that you referenced was a little stronger than expected and than the market expected, but it's not yet clear whether that's the start of an ongoing trend or whether that's a one-off. So we're watching closely to see how it plays out. It really is one of the critical factors in deciding where the Australian economy goes from here.
Is there a question over the degree to which discretionary spending can recover when housing costs remain high?
The housing market is certainly a constraint. I think as we see interest rates come down, the one thing we see over and over again in Australia is that as interest rates come down, house prices start to pick up, and we have already seen house prices in Australia start to recover and spark again off the back of the interest rate cuts that we've seen to date. But the housing market is still a constraint overall. So we'll see a bit of a pickup in wealth as house prices start to pick up, and that will make consumers a bit more confident. But we also know that there are affordability constraints in the system, that the construction sector is still constrained and productivity in that sector is relatively low. So I think the construction sector and broadly the housing market is still under some pressure.
Commonwealth Bank is forecasting another rate cut in August. Do you expect that's going to put a rocket under house prices?
Look, it'll certainly add to the momentum in house prices. The housing market in Australia is a momentum market, and we see that time and time again. We're only picking at this stage two more rate cuts in July and August. That's a relatively shallow interest rate cutting cycle, and we think the Reserve Bank will then, having got back to a more neutral rate of interest, will want to see how the economy plays out over the next 6 to 12 months before making a firmer step in one direction or the other. And that means that we might not see such a large pickup in house prices as we've seen in previous cycles. But obviously, if there was to be a softening in the economy and rates needed to cut by more, you could see a larger lift in house prices.
In May, the Reserve Bank said that it expected the neutral rate would be at about 2.7%. It sounds as though Commonwealth Bank thinks the neutral rate is above 3%. Is the RBA being too optimistic?
There's a lot of conjecture amongst economists, and I think even the Reserve Bank, they publish a range of estimates around this, and those bands around that range are very wide. Our view, and I think the view of many economists, is that a neutral rate is something around 3.25%, maybe a little above 3%. At that point, the Reserve Bank can then wait and see how the economy starts to play out, and if they need to take further steps, then they would.
The other big economic story of the week is the looming US tariff deadline. How do you see the tariff war complicating Australia's economic recovery?
So to date, Australia has been very well insulated from the broader shocks. Certainly we think it will have some impact on the investment climate here in Australia and possibly also the consumer. We're watching that closely to see how the Australian economy and the Australian consumer and businesses invest, make their investment decisions and react to those tariff changes. But fundamentally, we don't think it's going to derail the economic recovery in Australia over the course of the next year. We still expect growth to pick up over the course of the next 12 months in Australia, and we still expect unemployment to remain relatively low. But clearly, if there was to be a more marked deterioration out of the US, which also affected China, that could have a bigger impact on our economy here at home.
What can Australia's economy put on in the next 12 months?
So we think in Australia we'll start to see growth pick up from rates currently around 1 or 1.25% up to about 2.25%. That's still not very strong growth, but it's a marked pickup from where we've been over the past 12 to 18 months and a substantial improvement in the outlook.
Luke Yeaman, thank you.
Thank you.